If we go and deposit the money in the bank will definitely give rate of interest, right? But that will be less. Bank subsidiaries, they were the lessees. The reason is RBI used to feel that they are the non-banking activity. So people whoever are going for a lease financing, we call them as the lessees. They do not usually create any charge. So that is a plus point for any of the person, right? Hello everybody, a warm welcome to one and all. I'm Vidhyaashram from the Department of Business Studies in Vidhyaashram PUC College, the Temple of Excellence. Welcome to the next session of Sources of Business Finance. In this session, I'm going to explain you about public deposit. So what exactly this public deposit is? The word itself says that it is a deposit by the public. That means any organization, if they want to raise any fund, they'll actually go to the public and public will actually give them the money. So that is called the public deposit. So the deposits that are raised by organizations, by whom? By the organizations directly from the public are known as public deposits. Rates of interest offered on public deposits are usually higher than the offered on bank. The reason is when they go for it, then what happens is the public will get more interest and they'll actually come and invest in the public deposits. Any person who's interested in depositing money, in an organization can do so by filling up. Now, there are some procedures which he need to go with, and the procedures are like this: filling up a prescribed form. There is a form and he is supposed to fill it. The organization in return issues a deposit receipt as acknowledgement, of the debt. That means the debenture. Now here you need to understand what really happens is, if the public, any person who wants to invest in the organization, what is the criteria? There are some rules and regulations. Now, what exactly these rules and regulations are? That is, that means the public, whoever are depositing the money, right? So when they are giving the money, they need to actually fill the form. In return, the organization will actually give them an acknowledgement. We call that as a deposit receipt. The deposit receipt. So this is what will happen in the public deposit. So hope you have understood what a public deposit is. Directly the public is actually depositing money in the organization, and in return the organization gives them the deposit receipt, that is the acknowledgement, and that is how it goes. But here the tricky part here is, if we go and deposit the money in the bank will definitely give rate of interest, right? But that will be less. Only when we go with these kind of deposit, the rate of interest is more than the bank. So what happens is, people feel that it is secured and we can actually go with it. But I'll tell you, all the things, whether you make a profit or a loss, let me just tell you, if the company is doing good, only then you are supposed to go and invest. If the company isn't doing good, but I tell you, all the business have something called uncertainty and risk. I've seen the top MNC company coming to the flop. I've seen the flop companies coming to the top. So it's always what? Volatile market. That's why it's subjected to risk. So please please get an advice from your financial advisor, and only then you are supposed to go with this public deposits. So here there are few rules and criteria of lessor and the lessee. Now I have given you the first one is the lessor. Now here what happens is, specialized leasing companies there are about 400 odd large companies which have an organizational focus on leasing and hence are known as leasing companies. So you should know what exactly a leasing company is. In the previous session, I told you about the leasing companies. Bank and bank subsidiaries, even they act like that. That is, in February 1994, the RBI allowed banks to directly enter leasing. So these are the lessors. Who are lessors? One is the specialized leasing companies are the lessors. Second is the bank. But when the bank got it confirmed, that is in 1994, that is the RBI itself says you can directly go with it. Till then, only bank subsidiaries were allowed to engage in leasing operations, which was regarded by RBI as non-banking activity. So earlier, before 1994, the banks were not the lessors, but only the bank subsidiaries. They were the lessors. The reason is RBI used to feel that they are the non-banking activity. Next is specialized financial institution. Please understand, specialized leasing company is different and specialized financial institutions are different. A number of financial institutions at the central as well as the state level in India uses the lease instruments along with traditional financing instruments. Now you need to know what exactly these things are, right? Whenever we go with any of the lessor, that means a person who is giving it, right? And lessee is a person who is taking the loan. Now, you need to know who are the main big lessors, right? And the first one being is the specialized leasing companies. Now, you need to know that why leasing was called as one of the source of business finance. The reason is, for any short term or a medium term, we actually go with leasing. Now, even for a long term also, we go for leasing. So what exactly leasing is? That means you're taking somebody's place for a rental. So somebody's assets will be given to you and you will actually start doing it. There are so many people who have taken undue advantage of leasing. So that's the reason RBI always wanted to check that those things should not happen, and they have allotted only few people as a lessor, right? So the next one here is manufacturer lessors. Now the people who are the manufacturers, even they become the lessor. As competition forces the manufacturer to add value to the sales, he finds the best way to sell the product on lease. Sometimes what happens is he'll actually sell it in a lease. Even the vendors, all those people, no? Now these are the people who actually go with it. Now vendor leasing, there is something called vendor leasing. Now vendor leasing is gaining increasing importance presently. Vendors of automobiles, then you have consumer durables, etc., have alliance or joint venture with leasing companies to offer lease finance against their product. So many of the people are there who go with leasing finance, like the automobiles, and there are so many other people who manufactures the product. They are tying up, that means they are tying up, or it's like a joint venture. With leasing companies to offer lease finance against their product. Now the main thing here is you need to understand, they just want the product to be sold. So that's the reason they go with lease financing. Now let's check who are the lessees. The first one is public sector undertaking. You would have studied in the chapter 4 what is this public sector undertaking is all about. This market has witnessed a good rate of growth in the past. There is an increasing number of both centrally as well as state-owned entities which have resorted to the lease financing. So they are the one. Next is mid-market companies. Let me tell you what exactly a mid-market company is. The mid-market companies, that is the companies with reasonably good credit worthiness, but with lower public profile, that is called mid-market companies. They have very good credit worthiness, but what happens is they're not well versed the way the other companies are, have resorted to lease financing basically as an alternative to bank and then institutional financing. So what happens is they'll not go to the bank, nor they'll not go to the other institutional financing, but they'll come to the lease finance. The reason is what? Because they can't actually go more beyond. The next here is the consumers. Exactly. Now I told you that there are the manufacturers and the automobile company, they actually come up in the lease finance. So why they come for the lease finances? They want more and more consumers. So here the lessees are the consumers. Rent bad experience, right? Recent bad experience with corporate financing has focused attention towards retail funding. So they have a very bad experience with the corporate one. And here what happens is funding of consumer durables, for instance, like car leasing. I told you about the automobiles, the same way the car leasing is a big market in India today. The last one is government debts. Now here departments, where what happens is, and authorities, one of the latest entry, now they are the latest and the latest entry here, that is the government departments in the leasing market is the government itself. Recently, the Department of Telecommunications of the central government, that is your BSNL is there, right? Government took the lead by floating tenders for lease finance worth about 1,000 crores. So this is the latest news where even the government and its department have come to the lease finance. So people whoever are going for a lease financing, we call them as the lessees, and the people who are giving the lease finance, we call them as the lessor. So the telecommunication, they have actually taken it's the amount of 1,000 crores from lease finance. That means what? They have the capacity to lend 1,000 crores. So this is what it is. So let's check the public deposit merits. There are the merits is the procedure of obtaining deposit is simple and does not contain restricted or restrictive conditions as are generally there in the loan agreement. So here what happens is the procedure, everything is in ease, right? It's all ease. Next is cost of public deposit is generally lower than the cost of borrowing from bank and financial institutions. So here what happens is the cost of public deposits are generally lower than the cost of borrowing. Next is public deposit do not usually create any charge on the assets of the company. The assets can be used as security for raising loan from other sources. So what happens is whenever you go with public deposits, they do not usually create any charge. So that is a plus point for any of the person, right? And on the assets of the company, the assets can be used as security. So whenever you go with any of the assets, if they are used as securities, so it is actually good, right? So that is a merit of it. As the depositors do not have voting right, the control of the company is not diluted. See, only people who have taken or purchased equity shares, only those people have the voting right. Apart from that, nobody else have the voting right. Now, the people who have gone for the public deposits, even they don't have the voting right. Now, understand, when they don't have voting right, now the control over the company is what? It is not getting diluted. It's still concentrated. Now, who are the people who will actually vote? If you ask me the question, then it is like people who are the stakeholders. But here, when I talk about the stakeholder, I'm talking more of the equity shareholders. So here, they'll not get any voting right. So it's actually a demerit for people who have used or taken the public deposit. But for the company, it is a merit. That is, it will not get diluted. The company control will not get diluted. Let's check the limitations here. The first one is new companies generally find it difficult to raise funds through public deposit. Very true. The reason is there is a new company here. Now the new company, whenever it comes to the market and when they go with IPO, that is initial public offering, and the public deposits here, people will only think about who are these CEOs. Do we already know the CEOs? The CEOs were really good before when they took up the company somewhere else, or why the company has come now, what is the product segment, what is the product line, how much is the revenue, everything they'll check. But when it comes to public deposit, they'll have that kind of a setback saying that should we invest or we shouldn't invest. So that is one of the biggest limitation. It is an unreliable source of finance, as the public may not respond when the company needs money. Yes, when the company really needs money, the public at large, if we talk about it, they'll not respond to it. Reason is, even the public wants the company to perform first, right? Without performing, if they just come and ask the public deposits, why will anybody give, or why will anybody actually empty their pocket and give the money to the company? Particularly when the size of deposit required is large. When you expect that you need crores of money, and what happens is you will not get it. The reason is collection of public deposits may prove difficult, particularly when the size of deposit requires is large. That is, the requirement is large. But the question is, how will you raise fund through public deposit? Why will people trust you, and why will they actually give money? So these are the limitations which you are supposed to know. So I've covered the public deposits, merits, demerits. I have told you about the lessor and the lessee here. Please watch the video once again. It's a very clear video where you can understand. We don't want to drag more, because I want you people to know that sources of business finance is a very interesting topic as well as a chapter. Here, only if you know the concept of how to get money and how to start your business, you people can also start your business one other fine day. So if you have any doubt, students, you please call us. We are always there to help you. Thank you so much. I'll see you when I see you.